morning, everyone. Thank you for joining Emerald's press briefing today on the quarterly update of the ASEAN Plus 3 Regional Economic Outlook, the AREO. I'm Daisy Wong with Emerald's communications team. Today, we are glad to have Emerald's Chief Economist, Dr. Hui Ko, to speak to us on the latest growth, outlook, and challenges for the ASEAN Plus 3 region. Before we move on, just a couple of housekeeping things. The AREO report and the content of this press briefing is embargoed until 11 a.m. So that means the embargo will expire in about 30 minutes. And also please mute your microphones during this press briefing. I now invite Dr. Ko to brief us on the latest outlook. Dr.
Thank
Ko,
you, Daisy. Hi, good morning. Thank you all for joining us. In this first briefing of the year, I'll be focusing on the key developments in the ASEAN Plus 3 region and the changes to our assessment since October. The year has started on a positive note. As you all know, China has just reported a full year growth that is better than market expectation. And markets are also a lot more optimistic about a soft landing in the US now. And that has led to lower rates and also a rally in the stock market. On the other hand, the risk in the horizon, the US presidential election has begun, and there could be some heated debate going on. And geopolitical relations all over the world still remains heightened. So I'm going to start with this chart here, which shows the driver of growth for the region. As you can see, growth was mostly driven by private or domestic demand, private consumption in particular, the red bar, as you can see there. Export was relatively weak, and that's the dark green bar, which was negative in the third quarter of last year, but has turned positive this year. So that reflects the pickup in export towards the end of last year. On the right side, you see the retail sales volume has picked up. So we are actually quite confident that the growth for this year will be driven by domestic spending, but also stronger exports. We'll move on to China. As you can see, as I just mentioned, China just released its fourth quarter number, which is very strong, 5.2%, although it's weaker than the quarter before that. But China has gone through a bumpy year, but the economy is stabilized, and you can see that on the chart is beginning to gain in terms of momentum. Industrial production is picking up, and also retail sales on the right-hand side. As I mentioned earlier, we are benefiting from a turnaround in exports. You can see that from the chart on the left-hand side, where the export have bottomed out and beginning to turn around. So the gray bar shows the export volume, and that has already turned positive. Total exports in terms of value is getting, in terms of year-on-year growth, is getting smaller, although on a quarter-on-quarter basis, they have turned positive. On the right-hand side, we see the same thing. Basically, we look at the sectoral export in terms of technology and non-technology product. The red line represents the export of technology product, and that has pick up more strongly than the non-technology products, which mostly garments and other products. In terms of export market, again, we see the same phenomenon. Exports to China, US, and the rest of the world has bottomed out and turning positive. In particular to the US, the gray line has turned positive. And on the right side, we see a rotation of a driver of growth for the US economy. Last year, the economy was still mostly driven by services sector. That's the gray line on the right side. And goods spending was relatively weak, which is the main reason why our manufacturing export was weak last year. But it's turned positive now, and you can see the two of them have sort of more or less converged now. So there's been a rotation of a growth driver in the US from services to goods, and that means that there'll be high spending on imports of goods, and that's good for the region. On inflation, we see inflation has come off the peak. There was a bit of a blip, a spike, a small pickup in the middle of last year, reflecting higher crude oil prices and also natural gas, but that has fallen off again. So, and that's reflected in the headline inflation coming back down again. Core inflation also is trending down, although it's been a bit more sticky. On the right hand side, we see that commodity prices have basically come off the peak and continue to trend down, although it's still more elevated than before the pandemic level. Except for rice prices, which has spiked up a bit, and that's mainly because of El Nino. So far, the pass-through from the spike up in rice prices has been pretty mild, and inflation has continued to trend down, notwithstanding the higher food prices. Let's look at the markets. On the left-hand side, we see the stock market, have rallied. That's the shaded part that you can see, except for China and Hong Kong. For most of the other countries in the region, stock market have rallied, and that's because expectation that the US market has achieved a soft landing and rates are going to be lower going forward. And that's also reflected in the bond yield. We can see the bond yield has come off the peak. And on the far right, currency against the US dollar have appreciated some because of the narrowing of the spread between the US interest rate and regional domestic interest rate. Just yesterday, I think market interest rate have spiked up again a little bit in the US, but I think that's mostly noise. But because of that, I think the currencies in the region did depreciate somewhat in the last 2 days. So this is our forecast for the region. Basically the same as last year, slightly stronger for the region, mainly on account of China, been growing a bit faster than what we had expected back in October. So we have shaded the growth rate for the countries, based on the latest data available. Most of the changes are quite small, except for a few countries. So the red color means that we've shaded it down. For Hong Kong, actually, it's quite a big decline from 4.7 to 3.6. But otherwise, the changes are quite small, and at the aggregate level, for ASEAN region, we have 4.3% versus 4.4 in October, and for the whole region, slightly higher, 4.4% versus 4.3. And for this year, 2024, we expect growth to pick up somewhat based on stronger exports going forward, and also the pickup in domestic spending. I think the weakness in retail sales for China in the last quarter was also partly because of the weather. And so we see that going forward, retail sales will continue to climb. And we also see that in the retail sales for autos and other products. And also, if interest rates continue to decline, that would also provide a boost for durable goods sales. On inflation, again, about the same as what we had in October. Again, we've shaded the numbers a bit, depending on the latest number available. For the whole region, excluding Laos and Myanmar, we are looking at 6.6% last year and going down to 4.4% this year. That's including Laos and Myanmar, sorry. Excluding, it would be 2.8 versus 2.9 in October. And for this year, 2.6%, basically unchanged. And for the ASEAN region, we're looking at 3.1% to 2.8. So inflation is continuing to trend down, which is good because it provides takes the pressure off the central bank, and we can expect that at some point going forward, the central bank will start cutting rates. What? as I mentioned, there are risks in the horizon. So we have identified 5 major risks which can derail our forecast. The first one is the spike in global commodity prices. We have reduced the likelihood of that, from high to medium. But the risk is still there. We know that the geopolitics is still very unpredictable and fragile, and things can go, can heighten again, especially geopolitical conflict in the Middle East. And that would then lead to a spike in global oil prices. And in the region, I mentioned the El Nino this effect this year. I think expectation is that El Nino will last till the mid of this year, and that could lead to a spike in prices again. Then there's the growth in China could be weaker than what we had projected, which is 5.3%. And if that happens, that would be a big spillover onto the region. I think our own simulation shows that if growth in China were to fall to 4.5%, it will reduce growth in the region by 1.7%, which is quite significant. And then we have the risk of financial spillover from tighter US monetary policy. That was in October. We have removed that now, given the soft landing and the expectation that US interest rates are going to decline. On the other hand, we have identified the adverse spillover from US presidential election as a possible risk to because that could lead to heightened protectionist measures and cause turbulence in the market. The risk of a recession in the US and Europe has diminished, but has not gone away. I think now markets are putting a likelihood of about 20%. It's come off from a peak of 40% before, but it's still there. And if that happens, there will be significant spillover on the region. And finally, the US-China geopolitical tension, which is more of a medium-term risk, is still playing out. So we expect that to continue, especially in this year of US presidential election. It could be heightened. So we see that as a low risk. That both the US and China are determined to contain the differences, and so I think the terminology they're using now is de-risking rather than decoupling. So those are the major risks we identified, but there are also some perennial risks like climate change, cyber attacks, and the risk of a pandemic. It's still there, and we need to be mindful of those risks. So our message for this outlook is that the region has done relatively well last year, a bit better than what we expected, based on stronger exports and moderating inflation. And we expect growth to pick up this year on the strength of strengthening export, resilient domestic demand, and inflation should continue to moderate this year because of low commodity prices. On the other hand, there are risks in the horizon, and they have not gone away, and we need to be mindful. Among which, of course, is the risk to inflation. So let me stop here. Happy to take questions. Thank you.
Okay. Thank you very much, Dr. Koh, for your presentation. I have received some questions from some of you in advance, and let me begin with a couple of them. But in the meantime, please feel free to send us your questions in the chat box of this WebEx meeting. So let me start with a question on the update is quite optimistic regarding the turnaround in the region's overall trade, especially for this year. What is underpinning your sentiment?
Yeah, we are relatively optimistic for 3 main reasons. One is the global semiconductor cycle. We expect that to turn around. It's already turned around, but it will continue to get stronger, and that would be a big lift to growth in the region. As you know, most of the countries in the region are manufacturing exporters of semiconductors and electronics. The other reason is tourism. Tourism has recovered quite strongly, but has not fully recovered yet. So we see a further strengthening of tourism this year to pre-pandemic level and maybe stronger than that, hopefully. And finally, as I mentioned in my presentation, there's a rotation in the growth driver in the US from services to goods, and that would benefit retail spending on durable products, and that would in turn benefit our manufacturing export. So those are the main factors we see underlying the stronger growth this year.
All right, thank you, Dr. Koh. There's a question from Astro Avani. How do you anticipate the current geopolitical crisis in the Middle East impacting ASEAN? Some economic outlooks suggest the possibility of an economic downturn in the US. How do you foresee this affecting global economic dynamics?
Yeah, the impact of the geopolitical crisis in the Middle East has so far been pretty well contained. It has led to higher cost of shipping. I think it's estimated to have increased shipping costs by about $1 million per vessel, and also increased, and led to a rerouting of shipping around the Cape of Good Hope, which increased the number of days by about 10. But all that has not really fed through yet to higher inflation. So we are watching this very closely, and it could, if things escalate, it could lead to a spike in commodity prices and possibly lead to greater disruption in supply, and this would in turn affect overall inflation. And so we are watching this closely. We are hopeful that they will not continue to escalate. The other question on the US economy, as I mentioned, I think the expectation now in the market is that the US will have a soft landing. We don't expect a recession, but if it does happen, it's going to be quite significant because it'll shave growth off by almost half for the region as a whole. So let me stop here.
Thank you, Dr. Koh. Let me turn to China. There's a question on China. You forecast a growth of 5.3% for China this year, but China's real estate sector remains weak. Can you please explain the rationale behind your forecast?
Yeah, China's real estate has been a drag on growth, but I think the drag has diminished over time, and we expect that this year the drag will be even smaller, maybe even pretty flat. On the other hand, as I mentioned in my presentation, we see some positive indicators or drivers of growth for China this year. Consumption, we expect to continue to be quite resilient and be a main driver of growth, based also on I think a strong labor market. The other is investment is still holding up very well, especially infrastructure and manufacturing. I think what is encouraging is the high-tech manufacturing investment is actually very strong, over 10%. And exports, as I mentioned, is also turning around and should continue to strengthen this year. So those are the factors that we identify for our relatively optimistic forecast of growth in China.
Okay, thank you. We got a question from Hanoi Times, and I think the reporter is online. Ngoc Lam, do you want to tell us your questions?
Sorry, yes.
Yeah, thank you.
Sorry, I thought I just sent you some questions, so I had to look back at the email. So, let me look for the questions again. My question would be that what do you think about the prospect for the Vietnam's economy for this year? And also, are there any potential risks or challenge that could impact Vietnam's economic performance in 2024? And And the last one is how is Vietnam's FDI climate evolving, and what impacts might have on the economy? That's all. Thank you.
Thank you. Dr. Goh, actually, we also got another question from the SAMP on Vietnam as well. Let me
Okay.
also read it to you. Vietnam has long been described as a growing China +1 destination country, especially with the US-China trade war in everyone's backdrop. What are the likely opportunities and risks in Vietnam in 2024? These are questions on Vietnam.
Okay. The Vietnamese economy was hit very badly last year because of the slowdown in exports. But that has turned around in the second half. And as it turns out, growth was stronger than what we had expected, 5.1% instead of 4.7%. So we expect the growth to continue to gain momentum this year. And we are projecting growth of 6% this year. I know it's lower than the official target, but we do not see a very strong recovery in manufacturing export yet, because we see that exports continue to recover, but at a more moderate pace, and that's the reason why we see growth at 6%, which will be I think a pretty strong growth compared to the other countries in the region. So that's our main reason for expecting growth to continue to pick up. The other question you have is on
the FDI.
The FDI, yeah. Vietnam is one of the favorite country for most investors, especially in China +1 strategy, and it has attracted a lot of investment. Last year, it attracted $23.2 billion of investment, which is a little bit lower than the year before. But it goes to show that a lot of investors are very optimistic about Vietnam and continuing to invest in Vietnam as an alternative to China. And the investment is coming not just from Western MNCs, but also the Chinese themselves, partly because cost in China has risen, and they see Vietnam as a very attractive alternative platform for diversifying the supply chain. So on the other hand, because of the high concentration on manufacturing export, Vietnam is also vulnerable to exogenous shocks, and we saw that last year. That because of the downturn in electronic cycle and also in manufacturing goods export, the economy was hit quite badly, although it has recovered. So I think Vietnam should continue to diversify its export market, so that it's not concentrated in a few countries, and also to continue to move up the value chain by moving to higher end, higher value manufacturing exports.
Thank you. Let me turn to Cambodia. There's a question on how can countries such as Cambodia benefit from the ongoing reconfiguration in global supply chains? That's from Khmer Times of Cambodia.
Yeah, Cambodia also is benefiting from the reconfiguration. Most of its manufacturing export was concentrated in garments, but the manufacturing sector is diversifying into other products as well. It's particularly footwear and also travel goods. But it should continue to diversify the manufacturing sector, and there's potential to do that because it provides a very attractive platform for FDIs, to locate themselves. The problem for Cambodia is the logistic cost is quite high, and I think that's because of the poor infrastructure. And so I think there's scope for the government to invest more to improve the infrastructure and reduce the cost of infrastructure. And they should also probably devote more resources to upgrading the skills of the labor force so that they can move up the value chain over time.
Thank you. All right. We have received several questions on the Philippines, including those from the Philippine Star, Business World, Manila Bulletin, and ABS, CBN. Let me summarize those questions. So for Dr. Koh. So here are the questions. What are the factors that led to the reduction in the 2024 Philippine growth forecast from 6.5% to 6.3% in the latest report? And what will be the main drivers of the Philippine economy this year? And on the other hand, what are some of the risks that could dampen GDP growth? And the last question on Philippines is, do you think the BSP has done enough to contain inflation, and how could BSP now ease its hawkish stance by mid-year? Thank you.
Okay.
Thank you, Dr.
You may have to remind me of the last question. We have shaded growth in the Philippines down from 5.9 to 5.6% last year, based on the weaker outturn in the fourth quarter. So as it turns out, I think we were maybe a bit too optimistic on the growth momentum. So the momentum is a bit weaker than we expected, and we had sort of projected that forward. So we have also shaded down growth for the Philippines this year from 6.5 to 6.3% because of that. It's still, I think, one of the highest growth in the region. The Philippine economy has actually held up very well despite the high inflation and high interest rates, and it's much less dependent on export than the other countries in the region, but it's nevertheless still is affected by the weak export last year. And I think part of the reason why growth was somewhat weaker in the fourth quarter could also be that the rate interest rates are relatively high, but we need to keep rates I think relatively tight in order to make sure that inflation goes down. And that goes to the last question about when we are
BSP,
ready to cut rates.
Right.
I think we agreed with the BSP view that the rate should remain tight until inflation is come down to within target. So as you can see, the average for the whole year of last year was 6%, and we expect rates to come down to 3.6% this year, which is within the inflation target band, but it's above the midpoint. So I think by the end of this year, we expect that rates will be much closer to the band, and also to some extent it depends on what happens in the U.S. If the Fed starts to cut rate by the middle of this year, there may be scope for Philippines also to do likewise. But we would, as long as the economy is doing strongly, growing well, we don't see actually the urgency for the BSP to cut rates.
Okay, got it. Thank you, Dr. Koh. I see some live questions in WebEx, and sorry to keep you waiting. There's questions from Business Indonesia. May I invite Jessica of Business Indonesia to ask the question?
Hello, thank you. I am Jessica from Indonesia. So I have a couple of questions. The first one is, Indonesian economy is projected to reach 5% in 2020 and 5.2% in 2024. So what the factors that contribute to AMRO projection of increased economic growth in Indonesia this year, and what are the key consideration or main driver for Indonesia economy in 2024? Thank you.
As we are talking about Indonesia, let me also say a couple questions from Fortune Indonesia magazine. The questions are, Indonesia will have an election that will most likely to be held 2 rounds in February and in June. How do you think this will affect our economy? And the other question is, As Indonesia contributes roughly 40% of ASEAN economy, how do you think this presidential election will affect regional growth?
Yeah, we don't see the election as would have fundamentally affect the economy of Indonesia. Indonesia has done very well based on its very sound fundamentals, and that's not likely to change with the election. And also, I think so we don't see the election as having a major impact on the economy. Indonesia has had a very impressive recovery from the pandemic. They've been growing at around 5 to 5% in the last few years. And we expect that to continue this year at 5.2%. And so I think compared to most large emerging market economy, it's one of the strongest performer. But they have done well, not just in terms of the growth, but also in terms of inflation. They brought inflation down very sharply to within the target band. And also they have managed, at the same time to keep the fiscal deficit much smaller than the ceiling. So on the macroeconomic front, Indonesia has done very well. And we expect, that over time, because of the potential of Indonesia in terms of its natural resources on nickel, it will be able to attract new manufacturing industries, especially batteries and EV to Indonesia, which will hopefully provide another driver of growth besides the commodities.
Thank you. Okay, we have answered some number of questions on countries. There's another question on the rate cutting cycle for the region. With major central banks about to enter rate cutting cycle, how do you foresee this influencing the Asian region? This question is from 21st Century Business Herald, China.
Yeah, most central banks, I think, are positioned to cut rates, but it also depends on what happens in the US. As we know, US rates have come off recently, and that has taken the pressure off interest rates here. So if you look at the interest rate, especially long-term yields, that has come off recently, as you can see from the chart on the middle chart. So as for the policy rate itself, I think it varies from country to country. Some countries have already cut their rates, like in the case of the China or Vietnam. But most I think central banks are still on hold, and that's because the economy is doing relatively well, it's picking up speed, and inflation, although it has come off speed, remains elevated, especially core inflation. So I think it's prudent for central bank to remain on hold until inflation is really down, but also to be mindful of the impact of cutting rates, because that will put pressure on exchange rate to some extent because of the spread between the US rate and domestic interest rate.
Thank you, Dr. Koh. We have some more live questions on Malaysia. Can I invite Purnama to ask the question? Sarina, are you there? We cannot hear you. Okay, I think we can't hear from Purnama. Let me read out the question. What will be the drivers to support growth in ASEAN and Malaysia this year?
In ASEAN?
In ASEAN and Malaysia. That's
Okay.
the outlook again. And then Shin-Chu, are you there?
Hi, can you hear me? Hello.
Okay, go ahead.
Oh, okay. My question is, have the Malaysian's inflation forecast factored in the targeted subsidies implementations? And what are the downside risks for the forecast? Hello, can you hear me?
I didn't catch all of it.
It's a little bit louder. Thank you.
Hello.
It's
Yes,
referred to the Malaysian inflation forecast.
Yes.
Have you factored in the targeted subsidies implementations?
Oh, okay.
And what are the downside risks for the forecast?
A downside risk.
Yeah.
Yes, I think the headline inflation or the inflation that we use already contains the subsidies on some of the essential products like gasoline. So because of that, there is always a risk that when you lift the subsidies, headline inflation would be much higher. So when we look at the inflation trend, we sort of implicitly take that into account, how that is going to be the underlying inflation, if you remove the subsidies. And that's the reason why we think that, Bank Negara, has been quite prudent, even though inflation has come down quite sharply, to maintain the policy rate where it is today. Because they are in the process of rationalizing the subsidy, if I understand correctly. And so that could lead to some increase in headline inflation. But at the same time, because the economy is doing relatively well, there's no need to ease monetary policy. So I hope that answered the question. Thank you.
Thank you. Thank you, Dr. Koh. And there's another
Sorry,
question.
hello.
What is it? You have a
Sorry.
follow-up?
Yeah, no, on my question, I think he hasn't answered my questions on the growth outlook for ASEAN. Why are you downgrading
Oh,
from
the first
5% to
Yeah,
4%?
from Pranav.
Yeah, and for Malaysia as well, the GDP outlook for this year. Thank you.
Right.
And what
Okay.
will be the driver?
Yeah, the main drivers of growth, as I indicated in my presentation, would be domestic demand, which has been relatively resilient, especially consumption. And this year, also we expect external demand also to be stronger. I mean, there were very strong headwind last year, especially in the first half of last year, and that headwind has diminished and has turned around into a bit of a tailwind, but it's not a very strong one. But that will provide another, driver of growth for the region this year. Because as you know, ASEAN is very open, very especially dependent on manufacturing exports. So that has been a drag on growth last year, and this year we expect, that drag to diminish and turn into a bit of a boost this year. So that together with strong domestic consumption, and also we expect investment also to strengthen this year. So those would be the three main drivers of growth: domestic consumption, stronger investment, and also stronger exports for the year. Thank you. And there's also, I almost forgot this tourism. Tourism, as I mentioned in my presentation, also has potential to continue to grow stronger, because I think at the moment, tourist arrival is about 70-80% of the pre-pandemic level. And so we see that this year is the year when tourism will fully recover to the pre-pandemic, and hopefully even stronger than that.
Thank you. Thank you, Dr. Koh. Okay, another question on Malaysia and Singapore related. Malaysia and Singapore have recently signed an MOU on Johor Singapore Special Economic Zone and celebrated the halfway mark of the RTS link construction. How do you think these new initiatives would benefit both economies?
Yeah, no, I think there's a very game changer in a sense for the two economies. The two economies are so closely linked together, that it makes sense for them to have this special economic zone, and facilitate movement between the two countries. So the special economic zone in particular, I think is very important because it helps to harness the complementarity between the two countries. As you know, Singapore is a labor constrained economy and depends very much on foreign workers, and one of the main source of foreign workers is Malaysia. So there's a lot of cross-border flow in terms of labor between the two countries. Next one, and on the other hand, Singapore, has a lot of savings and capital, and so Malaysia will benefit from investment flowing from Singapore into Johor. So those will be I think the long-term boost for both economies.
Thank you. I think we are running out of time and can only take a couple more questions. And we have received some of these advanced questions. Let me read to you on this one. The regional currencies recently strengthened against the US dollar. Will this continue, and what are the key factors that will affect ASEAN plus 3 currencies in the next 12 months?
Yeah. As I mentioned, the regional currency strengthened recently, and that's because of the view that the Fed will no longer raise interest rates and is ready to cut. And because of that, interest rate, at least the longer term interest rate has come off the peak. For US 10-year yield came down from 5% to below 4%, although the last few days it went back up above 4%. So that's been the main driver of the exchange rate movement in the region. So because looking forward, we expect the Fed to be cutting rates rather than, although the question is when they're going to cut rate. I think the prospect is that the regional currencies going forward will be able to strengthen a bit more than where it is today. Of course, there will be volatility along the way, and we saw that just recently in the last few days. But I think that if you look out ahead, it's more likely that the regional currencies will strengthen against the US dollar.
Okay. There's one more question on the regional outlook from 21st Century Business Herald. I'm afraid this will be the last question of our briefing. Given the current global economic landscape, what are the key challenges and opportunities that Emerald sees for the ASEAN plus 3 economies?
Well, I mentioned some risk earlier, among which is a spike in commodity prices, and also weaker economic growth, and the US presidential election, adding noise to the, and likely that, at the moment it's mostly noise, but we know that, things can get very heated during the during the campaign, and that could lead to, a heightening of tension between the US and China, and, and lead to volatile financial market at the same time. Also, there's a risk of a recession in the US and Europe. We have not ruled that out yet. I think it's small. Most likely, the US will slow down this year, and together with Europe, we don't see it recession as a main important risk. We have put it as a tail risk here. But going ahead, there are also challenges on the climate change and all that. For ASEAN countries, the reconfiguration of trade it could be a boost to growth in the region because they are attracting a lot of inflows from MNCs who are trying to diversify away from China. So resilience has become an important factor driving, investment of MNCs in the region, and we have seen a big inflows into Vietnam, Malaysia, Thailand, and even Indonesia. Indonesia is benefiting greatly from these natural resources of nickel. So it's attracting a lot of the industries in batteries and possibly in electric vehicles as well. So we see that as long as the political tension between the US does not lead to a total decoupling of the economy, this diversion of or reconfiguration of trade could be benefit the ASEAN countries, and it will also benefit China, because China is technologically quite advanced, and it is export of renewable energy and products is growing very rapidly. The Chinese EV has just overtaken Tesla, as the number one export in the world. So China's growth will be driven mostly by manufacturing sector, even though the real estate sector is a bit of a drag on growth. And the real estate sector will take a bit of time to recover, because it's basically a balance sheet problem, and it takes time to But at the same time, the Chinese authorities have been trying to address the problem by providing more financing to the real estate sector, and also taking policy measures to encourage homeowners to buy houses again. So overall, the region is looking quite positive, and we are quite confident that this year growth will be able to attain the relatively robust at 4.6%, 4.9 or 4.6% for the whole year. Thanks. Let me stop here. Thank you.
Thank you very much. Thank you, Dr. Koh. And I'm afraid that I have to conclude today's press briefing here. Thank you again for your participation. You can visit Emerald's website to download today's real report, the press release, and today's PowerPoint presentation. If we missed your question or you require more information, please contact Emerald's communications team. Thank you very much again. Thank you.
Thank you.